Good evening. It's Brian Periginian, Senior Trader as well as co-founder of ProfessionalStockTraderLive.com, bringing to you Friday evening's technical analysis update. Well, the stock market continues to face many challenges, and today we had a stock market close down 148 points. We closed exactly on 8,000, as you can see right here. Again, we had been somewhat cautiously optimistic on the market, but the tape action is telling us different here. Again, let's take a look at the Dow Industrials right over here on the right-hand chart, and we can see we're flirting again with breaking down, and I think this time around we are going to break down and head down towards the lows of 7,500. You can see here over on the right side, and let me just zoom in a little bit more here. Zoom in even further. You can see we've just crossed over now on the stochastics, which is giving us a sell signal, and we think it's pretty evident that we're heading down to the lows of 7,500, 7,400, and quite frankly, with all the job losses that are taking place, Textron coming out with earnings here a day ago that were just absolutely abysmal. Boeing laying off, Starbucks laying off, Microsoft coming in with poor earnings, they're laying off. We're going to continue to see a sell-off in the stock market as long as the economy is not doing well, and we don't see any signs of any economic turn here. Despite the banks acting somewhat better today, only down $1.16, we think it's not just about the banks anymore. We think it's about the overall economy, and we think the stock market's ready to break, and it will not surprise us if over the next week we come down and we probe that 7,500 area. And let's take a look at a stock we did talk about last evening, and we think this is one of the key indicators here actually, and that's Wynn Resorts. If we take a look at Wynn, we can see over on the right chart here that we talked about last night, a break below 32.50 would send the stock wheeling, and it certainly did, as the stock traded all the way down to 29.5 this morning, and 29.55 to be precisely, and the stock had a very poor performing day today. And as you can see here, and I'll zoom in on this as well, you can see that triggered a sell signal here today. So we've got Wynn Resorts on a sell signal. We've got it breaking down. We think the whole casino sector is in trouble here, and we think that's pretty evident of what's happening in the economy. And it doesn't surprise me if Wynn Resorts moves into the mid-20s. They've got earnings coming out, I believe it's February 12th, and we kind of anticipated this pattern here telling us that we were ready to break down. Kind of the same thing we see reminiscent of the Dow. And in fact, let's go ahead and put the Dow average up here, and let's just take a look at them side by side. And it's kind of eerily very similar to what we're seeing here, how we've just had this slight move back up. We almost pierced the 20-day moving average, and now the Dow is starting to break again, and we think we're looking at the same thing mirroring each other from Wynn Resorts. So we'd be careful the stock market here. We are long, though, SYK, Stryker, via some options, and Stryker, despite our outlook of the market probably heading south, we're going to stay long this stock because we think this is a defensive type play. And if we take a look at a chart here on the left chart here, let's take a look. Stryker's in a nice pattern here where it's got higher lows, as you can see here, and it's putting in higher highs on all subsequent moves. So we like what Stryker is doing from a fundamental standpoint. We like what the chart's telling us. We're going to stay long Stryker. We're going to talk about one other idea, and despite our thoughts that the market is heading lower, we're going to look at ENER, the ticker symbol, energy conversion. And if my chart on the left here will come up, well, let's just go ahead and take a look at the chart on the right. We can see energy conversion is on a buy signal here. It's on a solid buy signal. The stock closed up on the day, and if this would come up for me on the left-hand side, which it's not going to, but we can go ahead and illustrate it here on the right chart here. We can draw the same trend lines. And we want to just show you that it's kind of in a wedge formation here. And let's take a look at it right here as we draw our wedge formation from, let's not even take it from the spike higher. Let's go right from here. and draw this in. And you can kind of see how we're in a little wedge formation here. And we think this is going to break to the upside. We think this is one of the stocks positioned well for President Obama's policy on solar stocks, and we think this is a good play in the solar sector. And if we were able to show you the on the left-hand side here, and you know what? Let's go ahead and just pull up a different chart here on the left side, on the right-hand side here. Now let's pull up the moving averages that we want to illustrate here, and let's zoom in on this just a little bit more. As you can see here, we've been hanging around the 50 and 20-day moving average for over a week now, and we think this is telling us that the stock is trying to hold its pattern here, and we think it's going to break out to the upside, even despite the market going down. And we think this is one you should look at on your long radar for a break above this downtrend line. One thing I think is important for us to note here is that gold up $23.40 to $927, and we had talked about gold backing off from moving up over 900 initially, and that's exactly what we got. We got a back off, and we thought gold could get back down actually into the area that we did see. And let's bring gold up here on the chart. As we can see here, we talked about gold breaking down from this wedge formation going back some time ago, then breaking out of a downtrend line here. Gold broke out, rocketed up, as we talked about, and backed off. And we thought it could back off into the 870, 880 area. It did, and now it's rocketed up to another new high. So we think gold is going to continue to move higher here on the short term. The gold stocks didn't act that well at all, though, and we actually talked about shorting the gold stocks this morning as gold was up $15 to $20 an ounce, and the gold stocks were acting very heavy. We actually did not put a short on, but we certainly identified the heaviness in gold. And one thing I do want to mention that is kind of worrisome is since 1950, down Januaries have led to bear markets or continuing bear trends or a flat market. And January closed down, so we certainly do not have a lot to look forward to based on that. And since 1956, down Januaries have turned out for that year being down on average 13.9%. So if we're looking at, say, another 10% down from here, 13% down, we're looking at another 1,000 points down in the Dow, roughly speaking, and we're talking 7,000, sub 7,000. So would it surprise me if that's where we're headed? Absolutely not. So let's keep our powder dry. Let's be patient here as we've been and continue to execute on some terrific swing trades. We don't have much else to report other than we don't think the Super Bowl, as a lot of people use the Super Bowl as a reading on the stock market. We don't think it's going to make any difference. We think the market is positioned here to break, and we think it's going to break this week coming up. So be on the lookout for that. Take a look at Wynn Resorts on the short side. We think Wynn Resorts is actually telling us the stock market's ready to break. So we have nothing else to report. Have a good weekend. Enjoy the Super Bowl, and we'll see you on Monday morning around 8:20. Thanks for tuning in.